Great. Hi, everybody. Thank you very much for joining us. I know we've had a lot on China in the past couple of days, so we hope that we're going to provide you with something new that you haven't heard already. We'll be talking about reform, accessing China's markets, reform obviously being a key part of that, and then we'll be moving on to some of the opportunities that our panelists see in China. And I'm going to go straight into Q&A. With no further ado and with no introduction, you all have the bios, so my apologies if you would have liked to have heard who is speaking, but feel free to read about it. Edwin, I'm going to start with you. There have been a lot of complaints, really, that China's not reforming fast enough, that its reform isn't progressing well enough, and that there is no real will to reform, particularly given the recent resurgence we've seen in credit and the resurgence we've seen in the support for the old economy sectors. Would you agree with that assessment, that reform is not, that there isn't a will and that there's been no progress?
I would say, first of all, I think it's all relative. I do think the will to reform is there and is there to stay. I think we've seen China from where we were. We started investing in China over 10 years ago, and it's been remarkably different now. We focus more on the credit and special distress side of the things. Just on the credit side of things, if you look at what has happened in the last couple of years, we have been able to do a number of things that we haven't been able to do in the past. For example, now you can get direct credit from an onshore company if the use of proceeds is going offshore. In fact, we were one of the first to test that technology a couple of years ago when SAFE relaxed the restrictions. On the domestic side, again, you've seen a big development in the onshore bond market that has been very useful for corporates onshore, especially now when the renminbi is looking a bit shaky. So what you've seen is a lot of companies have moved back onshore to take advantage of the onshore bond market so that they don't have to take the not only a lower cost of capital, but also a natural hedge on the currency. So again, it's not all positive, but it's also not all negative. I think we as a firm now have the technology to invest not only in dollars, but also onshore in renminbi as well. And again, that was, I would say, very, very difficult 5 years ago.
So would you say there's been an improvement in the access, or would you say there's been an improvement in the provision of the assets?
I think in terms of being able to invest onshore, the assets is better. Your comment earlier around sort of the oil economy, clearly there's no doubt, I'm sure you've heard from other panels before, the oil economy is slowing down. Stress it's quite common. Is there, would we have loved to seen more effort to really address a problem and maybe even really recognizing them as non-performing or liquidating companies? Absolutely. But I think that in the context of China, it is going at the pace of a kind of a China-style reform where you're not really shutting down factories as quickly as you would have liked.
Well, I'm going to throw this one on to Rob now, because actually you make a comment about you'd like to see some assets or some companies or go bankrupt or assets defaulted. And obviously we've seen that happen quite a lot lately in the bond market. So we have an improvement in access to assets that are quite a few of which are substandard, and it affects the entire market because it's such an immature market. So in your opinion, is sort of the reform, it seems very push me, pull you. You've got loosening in interest rates, and yet so the government's trying to encourage investment in the bond market, and yet it's allowing for defaults as well. Is this a conflicting message, do you think?
So let me try and give context of how we sort of see it. I think there's unequivocal and clear structural long-term reform. And we can debate that, and I would welcome that debate. But I think you can clearly show in fiscal financial reform, specifically in the credit markets where I specialize, I think the same would hold true in the equity markets where there's long-term financial reform. And they're pretty considerable trends. So if you want to just quickly take a pop up at slide number 7, you can see the growth of the corporate bond market. The corporate bond market, as an example of structural reform in what you want to see in the credit markets, right? It is clear and unequivocal growth. It's a $7 trillion market out of total debt in China today of $20 trillion. So we can worry about the stock of debt, but there's no question that you want to create a corporate bond market. You want to create the ability for RMB and foreign flows so that you can create a convertible currency. You have to have a liquid bond market. It has grown exponentially from almost nothing 5 years ago. So the structural reform is unequivocal and clear. What's really poor, and continues to be poor, and one would even say bad, is the tactical management and frankly, the people skills to run public markets. There's no experience in China in that, and that's okay. But we shouldn't mistake the fact that they want to have long-term structural reform and they're inexperienced to be nice about it, which is true in public equities steps, whether it's the RMB steps or now, precisely the point is going on in the corporate bond market, they're doing the right thing. They're letting defaults happen. So I actually think that's a good thing. 16 defaults this year to date. So long-term structural reform, yes. Tactical missteps. But that's going to give us interesting entry point opportunities, how we sort of think about it, in what we think are long-term positive trends for the creation of a capital market in China.
It strikes me when you say that slightly, if you build it, they will come. I mean, the supply side, it seems to be very much there, where everybody knows about the debt problem in China, or at least the debt availability, if you are an investor in China. So, but where's the demand coming from? You've got the LGFVs trying to put more, securitize more of their debt, and the supply overhang could potentially be quite a big issue if the demand side hasn't been properly developed. Where's that going to come from?
Fair question. So the short answer to that is two parts of the chart here: the government debt and the corporate debt. So the demand side is two sides of that coin. The government debt is frankly largely provincial debt. So it's the long-term LGFVs, as you rightly say. That's where there are a lot of problems. And it's frankly the banks that are the buyers. They're terming out what used to do in 1 year. So they're terming out, they're kicking the can down the road, but at least they're doing it in a liquid instrument. There are development of asset management companies. Foreigners are not a player in this, 2% of the market. The corporate debt market, just take a snapshot of page 9 here, is more interesting, right? Corporate debt market is healthy for Chinese corporates to create a long-term capital structure. And the buyer base there is interesting and problematic. It's still some of the banks, but there are asset management companies there that have been trusting too much in the public support. And as I said, 16 defaults just this year to date. That is what's broken the corporate bond piece of this puzzle, right? And what you see is, just as Edwin said, the industrial part of the economy. Of these 16 defaults, 12 of them are industrial companies. So all those coal miners that borrowed there, that part of the industrial economy is really broken. You're seeing defaults and it's healthy. So there's a lot of work that needs to be done in creating a better corporate bond market.
Thank you. You mentioned the messaging side of things, and I suppose the inexperience of a lot of the managers of much of the reform in China, and Larry has some interesting experience and had some good perspective on sort of how that is changing. Do you think that there is an understanding or an increasing understanding of how that message is important? Because the PR job has been pretty, so far, and that's being generous.
Yes. Well, I think they are learning. Can I just comment on the reform side? I think there is a lot going on inside. You may not notice, because one thing this time is different when the decapacity of the steel, coal. This time, what the government is doing is not putting a $4 trillion stimulus plan this time. What you see is they really cut the capacity, let the worker go home. You have to give them credit, the pressure they're taking. Even the Hebei province, which is surrounded Beijing, they already have 400,000 steelworkers go home. You think about the pressure to the government is extremely high, but they are doing this. The government announced 100 billion funding to to take care of those workers out of a job. And I think that is a part of the reform. So in terms of communication, or in terms of the particular, I think people mentioned last year was really a disaster, how they managed the public equity. That created a certain turbulence in the market, and also took away a lot of credit of the Chinese government. Of people thought about the Chinese government almighty, they can do whatever they want, but certainly they learn a lesson. Market is a market. There is a market force. I think the change also, you see they replaced the head of the governor of the CSRC, which is regulator. Certainly the guy who made a huge mistake in how to manage the market, and he's trying to manage the level of the market. So that certainly is a mistake. But I think they're learning. They replaced the guy, and they put a new guy. I think understands the market better. The communication skill. The communication still was poor, and even now they're still learning to how to communicate with the market. But this sometimes it's all dependent on person really. A person can sometimes drive the procedure. But if you mention this, I would say I have to give credit to the governor of the CSRC, not CSRC, governor of People's Bank, and the governor, so who's very skillful in the communication. So I would want to give an example. This is sometimes person depend.
Mm-hmm.
Yeah.
So the reforms are making progress, and hopefully we should see improvement in the communication of the goals as well. I don't think we've seen much improvement on the communication of the eventual outcome for the renminbi, and I suppose in some ways I wonder whether or not it's a bit unfair actually that everyone expects that China should be signposting what it's doing with the renminbi. Nobody expects everybody else to say what they're doing with the currency. Admittedly, obviously it's a managed currency rather than a free floating currency, but a lot of people have been on the wrong side of that trade. Should China be saying more about what it's going to do with its currency as it used to, so that they all know which side they should be on? I mean, is that what sort of reforms can we expect in the Chinese currency management?
I think it's more like it's U.S. interest or the global interest, the rest of the country interest, trying to maintain China have a stable currency, and China took a lot of responsibility on this part. I don't think of China's interest to maintain a very strong RMB, or RMB has been appreciated against dollar. But think about if I appreciate against dollar, how much it has been appreciated with their other trading partner, Europe and Japan. So it would be huge. So the pressure on the RMB side is high, certainly, because you see people travel to U.S., they buy 2 suitcases and they carry all the thing over. They thought about they already paid the ticket. So if you think about the currency, what decide the currency is a PPP, purchasing power parity, and you see the sign. But I think it's global interest. It's a U.S. interest. It's Europe interest. It's Japan's interest to maintain a very stable RMB is really to stop a race of depreciation of the currency. That should stable the global economy. Otherwise, I think we may have another crisis.
Well, there's a big issue, as you mentioned, crisis in terms of China's debt levels. And again, much of this seems to come back to confidence, because it's not like the US is in great state as far as its balance sheet is concerned. I mean, how can China overcome the debt problem? And certainly in terms of how do you think it should present its debt in order that the world can have a bit more comfort? I think there's a misunderstanding in terms of the structure of China's debt and its assets, its balance sheet, basically. Perhaps you can give us some enlightenment on that, Patrick.
Right. So I'm not an economist, but I do invest in the real economy. So I'm just trying to give you a sense. A lot of people, when they do analysis, you have an analyst and you look at the balance sheet of, the Japanese government, U.S. government, and their GDP against how much debt they have. But I think actually each government has very different situation by definition. Let's not forget, the Chinese government is very different from, say, American government. The Chinese government is the ultimate landlord in China. And so today, if you want to buy a house, your lease is, limited and 50 years at the most. And the Chinese government is almost like, it's a giant in terms of how much business they own. It's like a conglomerate. So the state-owned economy is still a very big part of the Chinese economy. So the Chinese government has a lot of resources, at their means, and so they can at their disposal. And still, they are running a very good fiscal situation. They're sitting on a lot of reserves. So it's really not apple-to-apple comparison when you think about how much debt there is in China. And I think this is something people have to really look beyond the headline numbers, understand the unique characteristics of this economy.
And also the captive savers, basically.
Right.
I mean, is that something, however, that as the financial liberalization progresses, is China potentially under more threat because the captive savings base, which has been very trusting of the government's stewardship of their savings, I guess, I mean, perhaps arguably in the absence of alternative, could that potentially change as markets liberalize and as capital flows become easier?
These days, people talk a lot about the Chinese money coming outside China. They're making investments and buying this and buying that. I don't know the data, but let me tell you, my sense is the amount of money being deployed outside China compared to China's GDP, I think it's still a small number. And if you're American company, if you're Italian company, and you will diversify and you will invest globally. So I think it's natural for the Chinese money to come out, especially, today in China, there are, the stocks are very expensive, the real estate is expensive. Where do you deploy your capital? And the reason why, people criticize the Chinese government's communication, the way of communication, but fundamentally, we have such a highly valued stock market, and if you are trying to communicate the message, it's difficult. The market inherent is just going to be volatile. Valuation is too high.
So you've given me a very nice lead into the next sort of the big question, which is, I mean, one of the tag questions on the blurb for the panel was, where should we position for 2016? And I wonder whether or not that's actually the right way of looking at the market, really. I mean, we can look at it in a short-term and a long-term basis. Should we be looking at it in a short-term or a longer-term basis? If you're investing in China, do you really need to have a longer horizon than that, Rob?
So I'd come out in the middle. I think you have to think long-term, and you have to have, you have to believe in the next 5-year plan. And I think it's pretty clear what the 5-year plan is. And so we invest in that thesis, and that the political power is there and can execute, and they have the balance sheet to be able to carry out the reforms. And I think that's been a pretty successful strategy if you just read their 5-year plan and follow it. So we take that 5-year view, call that medium term in our sense. And I think, frankly, simplistically thinking, we, because of the valuations in equity largely, like the top of the cap structure. We think you can buy into debt of good companies at low valuations. And it's that simple at the macro level, and you can actually buy debt relatively cheaply in Asia. Rates are high, so onshore rates are pretty high. So you can do interesting lending, top of the cap structure, and get cash flow. So exit is the other big question you have, rightly so, in any of these economies. And the natural cash flows from credit really make sense. So medium term, stay at the top of the cap structure. That's how we see a $20 to $25 trillion pile of opportunities.
But you mentioned, you have a mid-range view because it's based on the 5-year plan. So is China still very much just a policy-driven market?
You have to think about the political economy. You just can't. Political, economy. You got to think about both. And if you don't believe they're both, going to work, you shouldn't be investing. So the first part of your questions was, will they work? I think they'll work. Therefore, if you believe in the political economy and you can get outsized returns, that's pretty interesting, right?
But I just want to add the point. 5 year is every 5 year, not this 5 year. So every 5 year they have a plan, but it's continuous. I think it's good to have a plan, which is make the policy consistent.
Couldn't agree with you more. But we as investors think about it again every episode we put money in, and I like this next episode.
I want to make a point here. I think a lot of people, when they talk about China, they always talk about the GDP number, the big number. And China isn't about that. And if you think you invest in China long-term, short-term, and it doesn't matter. And I think what's really going on in China is you got to understand what's driving the change of the Chinese economy. With the younger generation, every 5 years, there is a new generation. Their consumer behavior is very different. This is opportunity you're looking at. This is also the biggest risk for most of the consumer brands, competing in China. I would say, if you're a fast food chain, say coming from the US, I'm not naming any of them, but is this considered the desirable lifestyle anymore? And should people go there and spend, have a date and with your girlfriend in their shop? And it's a very different situation now. And when someone report earnings and they said, oh, I'm not doing well because the Chinese economy is softening, I think that's nonsense, because they're moving away from unhealthy way of eating to more healthy way of eating. And this creates a big opportunity for a group of companies, and it creates such a big risk for another group of companies. This is what we see in China. And fundamentally, people are doing better every year. They have a bit better income. And also, they just have tremendous access to information. We got some 100 million people online these days. The speed they get information is so fast, they travel so much, and the younger generation, they speak English much better, and so they know what's going on in the world. So this is the generation of a consumer. If you do anything with consumer, you want to embrace them, understand where they're going. You want to be part of in that same direction where they're going rather than on the opposite side. And you can make money by becoming economist in China. And you think about the big trends, the physical numbers and all that. And I think you have to figuring out underneath what are the currents, and they converge, they collide, and this is what's the most exciting part about understanding this market. A lot of people make money. A lot of people grew business from 5 years ago from nothing to billions of dollars. There isn't just one example, there are many examples.
But do you think if you're following policy, then you might miss quite a lot of that? Because policy seems to be quite, mismatched with what's actually happening in the real economy. And so if you're just watching where the money's going, there's so much misallocation of capital. That's a major problem for the economy. And it's also a major problem for an investor. So
I think all my point is that if you're an investor, you got to be practical. And certainly you got to read the temperature and the climate of everything. That's your context, that's the environment you work with. But it's very important to be able to leverage that. Yeah, if the Chinese market, the stock market, and all the companies that they sport very high valuation, well, use that as a currency, make acquisitions. It's normal. Yeah, if you have a very high stock multiple, and you should make accretive acquisitions outside. I mean, that makes a lot of sense. That's why you're seeing a lot of acquisitions. It's very natural.
Do you think then that a better way to access China's growth is to actually be looking at, you mentioned they who shall not be named fast food companies in the US. Should you be buying potentially, if you want a less risky way of accessing China's growth, should you be buying offshore companies instead of Chinese companies? I mean, yes, Larry.
That's an opportunity from many dimensions. I think what we just touched is a portion of the opportunity. I think one thing is clear: China's still going to grow. China's still going to grow at a reasonable price rate. Maybe not 7, 8, 9, 10, but but I think 4 or 5% for a such large scale economy is very respectable. And in a way, a few years, still China will become the largest economy in the world. That will happen. And given that, we touch about the consumption. I think it's a rising of middle class in China. And talking about this is at this time, middle class in China, number of middle class in China is already exceed 100 million. 100 million people, which is more than what the U.S. middle class now. Given the wealth that has accumulated in China, it's enormous. So you're thinking about this. If those 100 million people want to travel to the world, what's the business will be? If all the girls want a diamond ring in their hand, how many rings needed, right? If those people want to take a ride on the cruise ship, how many cruise ships we need to build? That's all opportunity. If those guys want to spend a summer honeymoon on Greece, well, the Greek economy would be great.
You can buy it.
Right. And then now you see people are traveling in Japan, where the story is Chinese buying the rice cooker from Japan and buying the toilet cover from
seats.
Japan. A Japanese company keep it busy now. It's very busy there. That's the force. That's the market force. That's the opportunity. You can invest in China and you can invest in the world, but focus the rising of the middle class. They want good life. They want a quality of living. So that is a great opportunity.
I think people are so busy with making a distinction between, this is a Chinese company or Chinese economy, this is American economy. And I think if you're a brand, global brand, you want to be successful globally, you can't miss America, you can't miss China. And I think regardless being a Chinese company or American company, if you want to grow, you want to be number one in the world, you have to conquer all these markets. You have to figure out the China strategy. China's strategy is an option. It's essential. And so I've seen this from many of the very ambitious companies around the world. And so one of our strategy is we invest in leaders in China or around the world. And I think by definition, they're just going to have to figure out a very valid competitive strategy in China. And so that's why we invested in Cirque du Soleil. That's why we invested in the number one medical consumable company in China. In the end, they all have to become global.
The CEO of Bombardier was saying yesterday in the Global Growth panel that one of their biggest potential threats actually is that in the long run, China's going to have a lot more domestically created IP and it will be much more competitive. So again, I suppose it comes back to, are we seeing that shift away from the global companies and back towards China, in which case, are people investing enough expertise actually in understanding what's happening in China?
Sorry, this is a quick point I have to make. So in February, I was in Las Vegas attending Goldman Sachs private company conference. And I'm talking about the best emerging technology companies in America. Everyone, when they make a presentation, they have to talk about their relationship with Alibaba, with Tencent, with China. And they're seeing a lot of new IPs coming out of China. Because one thing about China is, it's the same thing. When the college graduates, young kids, when they think about building a business, they want build a business to serve 1.3 billion people, or at least a segment of that population. When you think large and you start to experiment at a different scale, right? And so you could potentially have some new IP. So a lot of our friends in Silicon Valley, they travel to China, they pick up new insights, they bring it back to their home business.
What sort of, yes, I was going to come to you.
No, I was just going to add, I think one way to also play China, which a lot of people I guess perhaps not focus on, is really on the credit side. Because I think historically, whether it's foreign managers or domestic managers, China has been very much an equity play. But the opportunity on the debt side is tremendous. And as Rob pointed out, you can actually make very high returns, in some cases with equity upside, that can create really, at the end of the day, equity type returns. So it's not, I mean, you have obviously many domestic companies that are going to become global, and even within China becoming very large, and you play the PE there. But there's also a lot of companies that you can lend to, that and even on a senior secured basis. Again, if you have the right infrastructure to lend onshore, you can actually do that. I mean, one of the things that we're doing now is, it's again, a lot of China lending is very asset based. So you actually have senior secure, oftentimes back against real estate. And one of the things that we're doing now, it's teaming up with developers, so that not only are you lending, in fact, you can make a case, you can even have an outsized return to the extent that the guy falls over and you lend to own. So those are the kind of things that you can be very thoughtful and very creative, and it's really a market that very few players are in. I think it's almost no competition.
But what sectors can you actually get access to? Because we're talking about the split between new economy and old economy, and a lot of the debt, a lot of the credit seems to be very much in the old economy.
I think the new economy, it's not where we focus on. I mean, we are kind of a contrarian, because the new economy, either they get so much cheap equity or so much cheap debt. That's not where we want to be. I wouldn't necessarily say, I guess old or older economy is where we focus on. Where at the end of the day, there's still a lack of capital, especially, I mean, we're really only doing business with the private enterprises. So there's still a lot of companies where it's not that they don't have bank lines, they just don't have enough bank lines. And sometimes, in fact, a lot of times the opportunity comes because it's not because they don't have access to bank capital, it's just the bank capital is very slow. So we would lend knowing that the takeout comes from a bank.
But the opportunities also presumably come with quite a lot of risk attached. Never mind the old economy and the the many stories we've seen of defunct. Yes.
But we still need the old economy. It's not the same. We just need a new economy. We still need the industrial
It's still a huge
company.
part of China.
We do, and we
yes.
still need real estate. But one of the issues is potentially, we talk about policy and China being a policy-driven market. Well, we've just seen in Wenzhou in the last couple of weeks that nobody has a clue about what's going to happen with leases on real estate. How do you deal with something like that? The government owns the lease on the real estate. So on commercial property, I believe it's a 40-year lease.
But eventually, that's the way eventually we resolve. It's just that they don't have this problem before. That was to say 20 years ago they signed the lease, but now it's 20 years arrived, they don't know what to do. But they will take the house back from the people? I don't think so. There just need to be a legislation process to well define. But I don't think that will create a crisis for themselves. I don't think so. So there was a message from the high-level government is, just deny what the local government do, and basically saying it's nonsense and irresponsible to put a policy to asking for extra taxi on the land lease, whatever. So I think it would just need to be a process, more likely. I mean, to you, probably people think it's unclear how this is going to happen, why you never thought about this. But, this is the case.
It's a potential valuation issue, though, isn't it?
So let me try and put some facts to this, because, again, I actually think there are some real facts that we can just answer the question. So maybe just put up page 5 here to, so what is shadow banking, and can you actually get to the asset, and can you do the senior secured deals that Edwin is talking about and we concur? There's real opportunities. So the first thing is you can foreclose on a share pledge in China. And it wasn't created because Western guys came in there. It was created because the banking system in China needed it, and they did that. So you can actually go and foreclose and take control of a building, as Edwin rightly alluded to, a loan to own. So if they foreclose, you can take a loan on it. You can also take a lien on an apartment in any one of these complexes. You have 300 apartments in some big place. So this is shadow banking. This is the worldwide of shadow banking. It's finance companies. So all those ugly shadow banks you talk about and hear about in the press, in China, it's 9% of lending. In the US, it's 30% of lending. But in the US, it's the smartest thing to do, alternative finance, and in China, it's a shadow bank. It's exactly the same thing. This is a real example of how you're going to see the development of the state state council has made edicts that says shadow banking is a good thing. There are going to be mistakes, but it's a good thing. So shadow banking will grow just as you see the economy grow. And they're creating the laws so you can foreclose. And we can walk you through real foreclosure. You can take a lien on an apartment and all that.
That's great for an institutional investor. I think one of the things that occurs to me when you talk about certainly peer-to-peer lending is that the structure of peer-to-peer lending in China is quite the reverse to what it is in the US, as I understand it. In the US, you have banks lending to myriad small borrowers, and therefore the risk of the creditor is actually very diverse. In China, it's the reverse. You have a lot of very small lenders who actually don't, this is where they put their capital. Of course, they're taking a bigger risk because they want a bigger return. But you have a lot of small lenders lending to individual larger borrowers, and the potential sort of social risk for that is quite enormous. So there must be more regulation coming in that area.
Unquestionably. And I think you've already seen it. We're not in any peer-to-peer deal.
Yeah.
Sorry if people are. But, there's one thing every regulator the world over wants to do. Protect mom and pop. And it's true in America, and it's true in Europe, and it's true in China. And if mom and pop's getting hurt, the regulator's going to be all over it.
So we've talked a bit, certainly when we were talking before the panel, we talked a lot about the opportunities. So I'd quite like to run along and sort of see, where you consider the better opportunities to be if there are short-term opportunities. I seem to remember that you said that you had been reducing your exposure in the debt markets in recent times because you tend to be a bit more contrarian, so before the froth. Anyway, maybe you can tell us a little bit about how you're positioned as much as you're prepared to share, and what sort of longer-term opportunities you think you are. I'm going to start with you, Rob, and then we'll work along.
This is the best long-term opportunity we think in. We think financial institutions controlled by best-of-class Western organizations or well-run firms. So control and be the lender yourself so you can foreclose. That is going to be a really interesting development of building financial institutions and doing great lending. Frankly, you get risk-adjusted return. We think that is very interesting. So you get debt, senior security, and you get the equity play of a financial institution. Our best idea.
Edwin?
Yeah, I think, I guess two things. Number one, I guess going back to your earlier questions, we are always long-term investors. I think doing short-term is very dangerous in China. That's my personal opinion. But on the credit side, I think there's a few ways to play it. I guess if you look at that chart, one thing I would also highlight is a lot of that non-bank or shadow banking, I guess how should I say, the credit culture in China is not the same way we look at credit. So if you look at really sophisticated people that really understand credit, that really plays in the more sophisticated game, it's very, very few people. Most of these, again, you talk about P2P, there's a lot of crazy stuff going on there. There's a lot of lending that really should not take place. And again, so far, most of it is asset-based. There are a lot of lending that I would also suggest it makes sense to the extent that you have the right contracts, you're, let's say, an off-take or whatever, with the right counterparty. Those are stuff that very few people will lend to because there's no real estate around it. The other thing we also focus on, apart from the onshore, I think it plays to our advantages to the extent that you have an opportunity to go onshore, offshore. Because either most of these money guys are only domestic. They cannot come out. So we have the ability to play not only renminbi, but also dollars. So there are cases, especially when you're taking a domestic enterprise offshore, there's a lot of service that you can provide by having both legs together. And that I would say is an advantage for a foreign manager to the extent that you are plugged into China that the domestic managers don't have.
Larry?
I think we haven't talked about healthcare, but I think healthcare will be a great business in China and maybe become largest business in China. It's currently healthcare account about 6.5, less than 7% of GDP. US is a 17 or 19.
17.
And China's population aging. But good thing about aging population, this population is wealthy. Those are people who made money in the last 20 years. And when they aging, they're gonna spend money on healthcare. So there will be huge business there. Then in China, there's no Merck. If you look in this industry, it's very fragile. There's no dominant play, but will be a Merck. Maybe it will be 10 of those Merck.
How do you access that that opportunity though, because at the moment, you know, that we're in the process of trying to go through reforms on drug pricing, on hospitals, you know, access to healthcare, insurance for healthcare. What's in the It's a very long-term play.
Yes.
It's got to be a long-term play. Are you optimistic about the potential for the government to be able to reform that? There are so many vested interests.
Yes, I would say so. It's already in process. So there will be allow the private sector to invest in this in hospital, and maybe privatize the public hospital. There's kind of difficulty in the healthcare because always this is, in a way, is a welfare related or people's health related. But I think pharmaceutical is in reform, and there's a lot of R&D going on in China side. It's you know what. We haven't talked about China innovation, but I think the next thing is we should talk about China innovation. And there's a lot of R&D in biotech in China, based in China, and I think that they're trying to become a leading position in approving drug. That's the government take a lot of action on that, hospital they will allow private to own hospital, to open hospital. But it will be progress, but I think it's on the way.
We're a healthcare player in China, and so just to illustrate what we have, and about 19% of the drugs consumed by the Chinese come through our system. It's a wholesale platform. We have 3,000 retail pharmacies, and speaking of innovation, and we had an innovation I think from a long time ago, and the first time I met Bill Gates, and he said, "I love your malaria drug," and it's a herbal medicine, and our scientists just won Nobel Prize last year. It's called Qinghao Su. It was fantastic. It's developed by the Chinese and based on TCM, but it had a contribution to the world. And we also invest in hospitals. So we have 18 hospitals now in China. And we are very busy and with investing in that business.
For profit? I mean, because
For
as I
profit,
understand it,
exactly.
greenfield or brownfield?
And we acquire hospitals. We also build new hospitals. And so about, I think, 60% of expatriates living in China come to our hospitals. We also like health insurance. We like senior living. This is where we're working with some of the best companies in the world to explore that model and to build retirement homes in China. So this is like the whole ecosystem you have to build. And yes, near term, you could have a policy risk, you have different risks emerging, but this is a long-term opportunity. And this is something you gotta start early. It's very industrial. You gotta build your strengths in the whole ecosystem. That's what we're trying to do. But meanwhile, you have to also emphasize on innovations. So on this trip, we meet with a lot of people who spend a lot of their efforts on curing cancer, and we got connected with them. We're very interested in the newest development in that area. I think in our lifetime, so this morning I was talking to Stephen Schwartzman, and he's saying that our children probably will live 10 to 15 years longer than us, just because there are some really great innovations going on in the medical field, and we invest in that area, and we totally believe in that. And the other area other than healthcare, and at Fosun we call it happiness business.
Health, wealth, and happiness.
Exactly. We think it's a big thing. And what essentially is that is many of the consumer brands, you touch at one aspect of people's life. And the compensation of the managers is how are you compared to your peers. And a lot of times when they compete, they forget about, in the end, you actually needed to serve the well-being of your consumer. And so internally we say, all the products and services we should bring to them, it should be happy products, happy services, make them happy. They think there's a utility to it. Let's not forget that part. So this is essentially our strategy. We think there's a longevity to it. Most of the Chinese we know, when they think about the world, there are two essential elements. One is 物质, the other is 精神. 物质 is material, 精神 is something about spiritual, meaning that thing is connected to your emotion. And China has well advanced from just producing something cheaper, the good value for the materials, the products, to where they think the services or the branding can really create emotional connection with the consumer. Or in other words, you're providing something called experiential for the consumer. So that's why we're very interested in investing in tourism, in entertainment, and in sports. So we think that's really the next wave of investments from China. And as that happens, as our children in China start to appreciate the power of those intangible things, I think they will start to become really good at building brand. So that's when you start to see Chinese brands showing up in the world, and people from different parts of the world, they feel there is a connection with them. So I think that's the next wave. It could happen really quickly.
Well, I have read a study that said that Chinese consumers will now choose for preference a Chinese brand over a foreign brand for roughly same price and quality metrics. It's no longer the thing to be choosing the foreign brand any longer. We are now open to questions from anybody on the floor, and we have one here already, several.
I've got a lot, actually.
Oh.
I won't take up. Thank you. Hi, I'm Brian Kessler. I've been doing business in China for the last 30 years. And we deal with a lot of global challenges. So I guess my first question would be, as we transition from a manufacturing-based economy to a service-based economy or consumption-based economy, in America, we've gone through that transition, and it's been slow. We still have been able to hold on to GDP growth that exists. My first question, I guess, is that I challenge, at this point, the stated targeted GDP growth that they keep talking to bothers me, because this economy is one of the largest economies in the world. If we in America said we were going to have a 5 or 6% growth, people would look at us and say, you're crazy. You know, if we have 2% growth, we've had a pretty good year. I'm asking, I guess my first question would be, is when do we see the Chinese stating to the world that, listen, we're just going to be at a slower growth. We're a large economy. We have lots of internal opportunities. We're going through a transitional issue. I guess my other question then is, but in America, as we've reduced our manufacturing base, increased our service base, we found a balance based on our populace. Now, in our populace, where we have 1.4 billion people, a large portion of those still in poverty, can you go through that same gradual transition so you can continue to have growth, or are we going to hit a point where things flatten out and it does become problematic?
Who wants that?
All right. Maybe I can speak something about this. I think one thing the world gets wrong is GDP. I think the GDP number is really misleading. And what should focus, like Michael Milken said, he has I think it's great slides on that. Is people looking for prosperity. So you're looking for prosperity of the society, not that GDP number. What's happening in China, I think, is the GDP number coming down actually is a good thing. You know, what reduced is those material, steel, coal, that wherever we see the GDP number is bad, I see clear sky in Beijing. So which is a good thing.
Yeah.
Right. I think what's more important now with the government is focus, is they recognize this, that if you look at the 5-year plan, which you read it very through, is they focus on the quality of life and the quality of the society. They are talking about equality, what's your question, and they want to lift the people from poverty line, which they have been achieved. You have to give credit on the China. Amazingly, every year, 10 million people lift from poverty line. That's I think that's what the government is focused on. In terms, another thing I talk about GDP is we spend so much. I spend probably 5-6 hours a day just playing my little phone set with the WeChat. I don't generate $1 of GDP, but I'm so happy about it. Who care about the GDP, right? So I think it's changing. You know, what make people happy? You know, the information consumption, it's not counted on the GDP, right? So it's really misleading in the GDP. I do believe we need to come up with a new measure of economic activity. Sorry.
But then the other thing is, look, I mean, there's another set of numbers to look at. GDP per capita in China, but the Chinese is what, $8,000 per person. Look at Korea, 27, Japanese 30 something, 34. That's a long way to go. And Japan started their industrialization, modern development 30 years before China. I mean, that's after the war. I mean, 30 years of time, and there could be a lot of changes as well.
So my issue, though, is we still have a large part of the populace that is still below the poverty level. And these other countries, when they maxed out on their manufacturing bases, Korea, Taiwan, Japan, Hong Kong, China, which I've dealt with all of them, and America. I come an American family that's manufacturing here in our home country, and also watch those manufacturing bases transition. But none of them still have that large unemployment base while we have this large one. So we have this country that has this balance. And I do believe that we will transition to China, that we will become a consumer and marketplace. But I worry about this large populace that's still in poverty. I worry about this large populace that's still in poverty if we've lost the ability to have new manufacturing opportunities, unless they find ways to move inland to exploit those at a different economic structure than in the more developed cities. I'm trying to figure it out, quite frankly. I don't have the answers.
I think urbanization still going on. That's also what drives the China growth going forward. Urbanization lift the poverty line, and the labor cost actually increase in China. But labor cost increase means the salary is increased, right? Now even when people talking about if you find a nanny in the Beijing, they can earn more than what a college graduate earn. So that actually helping the low-income people. If they really willing to become a nanny in Beijing, they can earn good salary.
So will manufacturing leave China? Will go elsewhere?
No.
I don't.
Will it
balance.
It'll balance.
Yeah.
The world's largest industrial base, period. It's
Yeah.
not leaving.
Right.
It's real assets are here. So it's a transition. If there's one thing the political economy of the past 30 years is good about, it's handling this problem. I'm not so worried about this problem. Speed of transition and doing it well, yes. But you got an aging population. You're going to Chongqing. Go to see Chongqing. You physically move from all the old Rust Belt. There's a big Rust Belt, and it's going to Chongqing. It's happening today. That piece I'm less worried about. It's the transition to really create consumers when you haven't given them the social safety net. That's a harder one. But I think if there's something the Chinese political economy has proven is the ability to do this and pull people out of property.
Gentlemen,
Myra.
Myra. Back there. Yeah, there was a hand up. Yeah, the guy right at the back. Sorry, hand was up. No, that's you. You, not right at the back. You behind.
Sorry, Myron Scholes. I was just wondering, though, in terms of the debt, going back to the debt problem, which I think is going to be very difficult to unwind the debt problem in China because it's gigantic now. It's unbelievable. I've never seen a situation where you have 5 times the debt increase in the economy over a period from 2008 to current time. But then you're saying on top of that, let's put a social safety net on top of. One of the things we found out in the West and what they found out in Europe is, and I would like your opinions on this, is we start a social safety net that's unfunded and it's like more debt on the system. So sure, everyone wants you to have a social safety net, but how do you pay for it with the debt overhang and everything else that's in the economy today?
Can I jump in?
Yeah, go for it.
Nice.
Okay. in China, one thing you probably don't recognize, there is no municipal bond yet. Not yet. They can start a municipal bond. You know, every city, how much municipal bond was in the U.S.? In China, there's none. So they could do municipal bond. And as Edwin said, Patrick said, the Chinese government actually owns the land. That's a huge amount of assets. It included the municipal city, and they own the land. They can sell the land. So if you look in their balance sheet, it's not bad. Even taking on all those loans. So those debt you accumulated, you worry about. Maybe one day they allow the municipal government to issue the debt, and then they can replace all those debt with a municipal bond.
Gentleman in front there, yeah.
Since the panel has discussed a lot about the healthcare system, so I want to follow up on that because I was raised in China. So one of the things I noticed is that every time, at least a few years ago, when I moved, traveled back in China, one of the things that struck me was how affordable a lot of the healthcare was, at least compared to what it would cost in the United States. An example that I experienced was that even without insurance, the out-of-pocket pay that I need to to pay for a simple medical procedure in China will be equivalent to the co-payment that I need to pay with insurance and with full insurance here in the United States. There is no question in my mind that obviously the healthcare system needs an overhaul because of its aging population and the fact that to build this social safety net, everybody preferably will have some access to the health care. But I guess my question is, I wonder what has been considered, in terms of policy, policy making to build this healthcare system to avoid, at least in my mind, to replicate a not so ideal system, at least in the United States, where the system becomes so unwieldy, and if you look at the cost increase for the healthcare every year in the U.S., it far exceeds the general inflation rate of everything else. So I wonder, especially Patrick and Larry, that you have some insight on this.
Oh, Patrick, don't pass that one over. No. You're having you operate hotel.
He's the
hospital,
one that's going
sorry.
to make money.
Yeah, exactly.
Yeah, yeah.
No, well, listen, I mean, it's healthcare, it's very complicated, and there isn't really a good model to copy from. And this is, I think this is one of the hardest reforms the government is faced with, this government. It's hard. And but for us, I mean, we're spending a lot of time on developing the health insurance. I think it's an important supplement to the government support.
The government have pushed a policy through to require some pilot programs to require health insurance.
Yeah, exactly.
So will that go part way towards filling that gap? Do you believe, in terms of building a healthy health system? You put the insurance in place first. I don't know, Larry. Do you have thoughts on that?
I think just for the question, I think that what China is trying to build is more like a UK national healthcare system. The people still complain a lot because they don't know how bad UK NHS system is, and they don't know what the US system is, how bad it is. They don't know how bad the Obamacare is, so they complain. But like the gentleman said, it's really not too bad. I walk into the hospital and I even pay my out of pocket. It's cheap, very cheap. Consider what the money you spend in the US. Maybe they don't offer the best best service, but for majority of people, the service is it's good. And the Chinese doctor, they probably don't spend much time on you, but they're very experienced because they see hundreds of patients a day. So it's not bad, I would say.
I think that's all we have time for. So,
Very simple question.
go on
Consumer
then.
attitudes towards food now and how it's going to change.
Is that simple?
So,
Really?
sorry,
That's a bit of a cheat. I don't think that's that simple. Food.
consumer.
It's changing. It's changing very quickly, and it's a healthy, organic stuff.
Yeah.
They read the label very carefully.
Very quick,
No. Yeah.
very quick dissemination of information as well. It's leapfrogged everywhere else. I'd like to thank very much all of my panelists for some great insights into China, and I'd like to thank you all for coming. Thanks so much.
Thanks, Lucy.